Welcome to more trades. This is going to be an update on Bitcoin. Wow, we had some moves yesterday, and Jerome Powell did not increase interest rates, but however, we dumped. This is because the market had priced it in before the Fed rate was announced. The expectation was, I believe, 99% of no interest rate hike. So the markets were rallying into the Fed meeting, and we dump. And I was warning you of this. I told you that if we come here, we have these retracement levels from this peak to the bottom. You have the 0.618 and 0.786, and I said if you break it, then you're coming to higher levels. You'll be coming to 27.456 or even 27.8, 27.7, 27.8. But for starters, I was talking about this level. Look for a reaction, and you can see we came to it, got a long wick, an indecision candle, which wouldn't be very clear as it's gonna dump. I would prefer it to be like a doji, something similar to this. But however, you had a wick and you had a chance to come down. Then you had a confirmation over here. You had the cross down, the EMA, the 5 crossed the 13. That gave you one candle, and the next candle, then you had this dump. You could have taken so many positions. We came back tested the 0.5 and continued. Beautiful entries for whoever took it. We have still this level that we may still come up. It's not very strange at the moment. We're kind of stalling at these lows, and there is a possibility we might come up. And if we do bounce up, I can see us coming as high as 27.5. It's possible. I'm not saying that's all it's gonna do. It might go higher. It might go to 28k or even 30k. It is possible. But for starters, if we're getting a bounce, I'll be looking at these levels again, because Bitcoin, everything has a habit of bouncing off Fibonacci levels. So even if we come up, I'll be looking again at 27.2, 0.5 fib, 0.618 and 0.786. But I will do it a bit differently now. Now I showed you those levels. Now here would be a smaller range. When you do micro counting, it doesn't work out very well, but it could be helpful a bit. I mean, I wouldn't really focus on these, but you have 27,100, 27,157. Now you're micro counting. So I would focus more on those levels I gave initially. If I go back, you will see what I'm talking about. Yeah, the 27.2, 27.266, 27.3. We need to zoom out and see the larger picture, turn off these indicators and delete everything from the chart so we can see the price action clearly. Now you can see clearly we're stalling here, but we've done this sort of pattern before where we come down, we come up, we retrace about 50% of a impulse, come down, then we may make another high. And I can tell you that we've done it before, and I'm going to show you what I'm talking about. We're doing something similar now. Over here we came down to the 0.618, but we stopped at the 0.5 so far, but we may come down. Looks like we want to break down. Now on larger time frames, when you zoom out, then you see the patterns. When you look at charts over and over again, you could see the pattern. And if you've been getting chopped out in these trades recently, it is difficult. It isn't easy to trade these markets. It's very choppy. And that's why you need to always enter a trade with a stop loss. Because once you enter a trade and you don't have a stop loss in, once you are in the red, say you're in the red $10, as soon as you open the trade, you enter the small position and you're in the red of $10. Then you say, no, I don't want to close it in a loss of $10. It might go my way. You wait, it goes to $20. All of a sudden, you know that you blew up your account. You're liquidated because you didn't put a stop loss. Another thing, over leveraging. And third of all is position size. I mean, as a beginner, you would kind of go over leverage because you don't have a big amount of capital. At least most people don't. Use small amounts of money and you want to grow them to a bigger amount. So you try to leverage it and hit home run trades. And because the fees are too much of the trade, so it's not worth it going for a small position and your fees are higher than your profits. So the trick is those three things you need to do, and entering higher probable trade positions. So you may enter a trade in a point and you get stopped out. I'll get back to it, but now I want to show you the pattern I was talking about. You form like a top and then you spike up, or like this is what we're doing now, almost like this. We're coming up, we're at a top, we came down, then we spike up, or you can look at it in a larger time frame, like we came all the way up, came down and spiked up. We may be doing that, or over here, look at it, this pattern, and you spike up only to come down. But then you look at it in a smaller scale over here. Now, yesterday, if you took this trade, let's go to a smaller time frame. I will explain to you how could it play out and how would you react to it. For starters, you would see this indecision candle and you would jump in immediately. You'd see price falling. You'll jump in. You might get wicked up, wicked down. You're not sure. You get wicked out. Then you turn long. You get wicked down. And then you turn short. Then you got stopped out long. So sometimes entering a trade with a tight stop loss, especially when the markets are news played, when it's very volatile, like the FOMC meeting, Fed rate meeting, that's very volatile. You need tight stops if you want to trade before or during. Now, if you look what happened immediately after that, the entire market, not just Bitcoin, that's when at 9:30, when Jerome Powell got on stage, that's when we got this candle, 9:30 exactly, spike up, spike down, and then we had the drop and we had the continuation. So I advise you to always use stop loss. I think I've gone long enough about this. Another thing is trading when the volume is high. You have better chances of succeeding or making profit in the trade when the New York market is open, or when the London market's open, or when the Asian market's open. But New York is when you get maximum volume, because you have New York and London at the same time for a certain amount of hours. You have a good amount of volume. You could ride the momentum. So essentially, you could sometimes ride the moment. You see the candles dropping, and you ride, and you get a bit of a move to a certain point. So that's for Bitcoin. If we come down, I see us now. I need to bring back the indicators, and I think I'll go into Solana after this. I haven't done Solana TA for a while. For my Solana fans, let's go back to this indicator, and it's very easy for Bitcoin to come all the way down to 26.5. Yesterday's low was 26.746. You can see we had this big wick over here, and we may come and recover it now as I'm recording, if I stay long enough. Another thing is that we have the 15-minute 800 EMA, which would be the 200 EMA on the 1 hour. We could come down and retest that since we're breaking down 26,680, but you're about to have a cross between the 200 and 800. The thing is, when Bitcoin looks very bullish or very bearish, and it sucks in everyone, then it tends to reverse. So now Bitcoin's looking so bearish. And I'm sure if you look at the order flow and all that, you would see that Bitcoin, there are a lot of shorts in the market now. Stochastics is another way. There is a video in my channel, watch it. It's Trading for Beginners. There is a playlist called Trading for Beginners, and the other playlist is how to find tradable assets, meaning how to find the highest probable, the asset that could give you profit. I specifically go into how I think about it and how I decide on entering a trade, and it's worked for me so many times. Sometimes you lose trades. You need to accept that you lose trades, but that strategy, using the 5 and 13 EMA, using the stochastic crossover, helps, especially in very volatile markets. Okay, that's for Bitcoin. If we come down, first zone to watch for is the 26,682. We are essentially on the day of the midweek reversal, so we might come back to the psychological levels as low as 26,400. It's very possible. You can see the volume is a bit low now. We have London open, but when New York opens, we'll have more volume, so we might push down even. Another strategy you could look at, if you know when the Asian markets open, then you can see sometimes Sydney sets the high, then you see Tokyo coming in, maybe pushes another high. But if you see Tokyo pushing in a certain direction, then you could almost say a lot of times Hong Kong will fall in the same direction. So if Tokyo starts dumping as it did yesterday, we had Sydney that came. Sydney came down. Look at that. Sydney came down, spiked up. Tokyo came down, spiked up, and Tokyo started pushing down. Hong Kong came over here, and Hong Kong continued. And London can sometimes set the high of day, and today it might set the low of day. And then New York might do the reversal and then continue down. However, if you watch my videos before, you would know what to expect ahead of time. The past few videos I did, whether they were live or the videos, I gave you the target of a possible short entry, and they worked out very well. On the stochastic on 15-minute, we are getting to the oversold. So usually when you're at the bottom, you'd expect a reversal. How high? It doesn't have to be so high, but it could be. Remember, if we go up and start breaking 27,456, 450, 27,450, then, which is this high over here, 27,478, sorry, then you know you might be coming to the 27.8 or even the 28K and maybe even higher. Okay, that's for Bitcoin. So a possible reversal zone you should watch for is a 800 EMA on the 15-minute and this level of 26,567 for now. If you start breaking lower, then you go to the higher time frame where you can see where there is an insufficiency, like when we do this, when you have a sudden move to the upside, then you have a down move to recover it. We've done it in smaller scales and bigger scales. Now what Bitcoin may be coming is for this liquidity over here, and if you break down, then you could almost see that it might come this low. Now let's go for Solana. Let's go to Sol. Sol, my target for now. If I was in a long, I'd be looking at the value area low at $20.75. We are stalling at the 200. So if I was trading this, I would be looking for a short entry. And if I saw this candle, this is what I sort of saw on Bitcoin yesterday, not exactly the same. If I saw this candle, I would enter short and hope that Sol breaks down to give me profit. Now I'm going to show you. You need to see the 5 and 13. Have they crossed over? Not yet. So almost there. However, my MACD has been going down as price has been going up, and that is bearish divergence on the 4-hourly. So this is bearish div, and at the moment we don't have any bullish div over here with the stochastic. I'm not going to look at other indicators because the video would be too long, but on the 4-hourly we didn't get a crossover, but 15-minute definitely. 1 hour, I usually look in the 15-minute for a crossover. Okay, 1 hour, you got the breakdown, you wait for the retrace to continue lower, or if you're more you want to take higher risk, you could take it now. You could come down to the 200 and bounce off on the 15-minute. You've done it before. You broke down, you wick, and then you continue higher. So you might do that. You might come down, come all the way here, test last week's high, come back to the 50, maybe touch it, wick it, and come back down. But on smaller time frames, on the hour, you are oversold. You could still continue. The stochastic might still bounce. 15-minute is showing you overbought, so you might have a continuation. On the 15-minute is what I look at. So you see you had that breakdown, retrace, and now you're sort of stalling over here. And if you look left, maybe you have a level over here. Yeah, you had built a structure over here, so you're getting some support from buyers over there. But if you break down for Solana, my targets remain the same. We could go as low as $12 and still be bullish on Solana, and we could even come as low as my low targets here. You could see them between $5 to $7 and between $8 to $10. Now, short term Solana target 18,343 is the level we bounce from. But I see if we come down 800 EMA might be a good spot for a bounce, or even we come back to the psychological range, which could take us down all the way to 18.7. So if you're a trader, Solana could be a short, not telling you what to do. It is not the best impulses down, but however, you are getting rejected to the upside. First level 20.75. If we bounce off this level at 19.644, then you could come all the way to 20.4. But if you pull a Fibonacci over here and say you're going to bounce from 19, once you see that wick at 19, you take your fib from the high over here all the way and say, okay, if I bounce from here, then I'm going to bounce to 20.2, which is a 0.618, or 20.351, 0.786, or the 20.1, which is a 0.5. So those are the levels immediately to watch for to the upside. Yeah, that's about Solana. DXY, the dollar index, has been showing tremendous strength. So when the dollar's strong, I told you the dollar might, if it breaks out, it's going to be a problem. We'll be going to 106. And as we can see, the dollar is slowly crawling up there. We are overbought in the dollar, so that might entice a move down. As you can see, we're kind of stalling. We had that big quick down over here, which happened earlier today. Now the dollar, if you go to the higher time frame, what we did over here, look at that. On the hourly, we have this gap. We might come down, recover this. Your 50 EMA is at 105.24. Why is it important to look at the dollar? It's very boring. We like to trade crypto and all that. Yeah, but to some extent, there is a correlation. Sometimes they decouple and you don't find the correlation. But dollar stalling over here, I don't see a wick to the upside, but this candle is weak. And if I was trading something, I would most likely short it because it's too overextended to the upside. That's my strategy. On the daily, how far is the 50 EMA? If we were to retrace to the 50, it's all the way here, 103.764. That could give Bitcoin a big pump if the dollar retraces, which is very possible that we get some sort of retrace. So tomorrow is the last day of the trading week. Usually on the last day of the trading week, you get people running for profit because they close down for the weekend, so they want to make money. So remember, there are a lot of people now that are shorting the lows. So there is a good chance tomorrow we get a pump or a spike up. I might be wrong, but probability-wise, you chase the money and that's where the money would go. My next level for the dollar, I anticipate the dollar to get to the 106.358. And if we get there, then things will be looking even worse because next level, 109, followed by 111. 111, did we ever get there? Yeah, we had hit it before, and it's a strong rejection point. You could see over there. This is on the daily chart. We stalled there for a few days and we bartered out over here, Batman pattern, and we fell down. So yeah, hope you like the updates. If you did, hit the likes. It helps the YouTube algorithm when you hit the likes because it recognizes that you like the videos and it posts this more. You see it more on the recommended list. And when you share the videos as well, subscribe to the channel if you haven't. Share the videos because it could help someone make a few bucks here and there because I give free, free trade setups. And if you'd like to support the channel, there is a link in the channel description. I'll see you on the next one.